briefing underway, and first of all I'm going to jump in with the corporate earnings from this morning, because very busy morning. It's actually the busiest day of earnings season. It kind of peaks today, so after that first fairly quiet week where it's just big banks reporting, we're getting the kind of big cluster of companies across different sectors. That includes then Europe and the US. I believe the stat this morning, there was about 85 of the stock 600 reporting. Similarly, there's in the US multiple earnings reports coming out. Some of the bigger names we're looking out for from the US: Intel, Dow Chemical, MasterCard, Procter & Gamble, ConocoPhillips, and then Amazon, the big one after market yesterday, or tomorrow, excuse me, I get this straight, Amazon tonight. It was Facebook that was yesterday. But looking at Europe, first of all, I've managed to obtain a bit of a snapshot from one of my contacts in terms of the percentage movers. And this pretty much tells a pretty clean story of earnings related, because the ones that are outlying percentage numbers are typically earnings led. The big one, of course, is AstraZeneca. They would have been down as much as about 16% at the open. If you equate that into their market value or capitalization, that's just a cool £12 billion knocked off your value of your company at the market open. It has steadied slightly, but it's still down about 15%. This is back on the failing of a key blockbuster drug in trial. Then some of the other names on this list: Airbus earnings this morning, they were negative. Deutsche Börse, Deutsche Bank earnings led, they're down about 2.5%. Bayer, one of the big German names, down 2%. Lloyd's in the FTSE down 1.5%. BASF in Germany down 1.7%. On the flip side though, Diageo up about 6%. AB InBev, one of the bigger European firms, they're up about 5%. Schneider Electric in France up 4.5%. Dassault Aviation up 4.5%. So Telefonica, that was also earnings, up 3.5%. So it's not all doom and gloom. There are some companies that have had some pretty decent earnings reports. Orange also higher in France, VW also higher at the open. So hence the reason why when you look at the equity markets this morning, it hasn't been, although the press have kind of made the bigger deal out of the negatives, in fact, looking at the equity market, we're kind of just sitting here having rallied in the futures, actually going through the cash, or since the cash open. Looking at where we reside at the moment, obviously in terms of the S&P, we're just finding a little bit of resistance around that high point that we're seeing around yesterday's open. If we were to look at the Dow, similar type of story, in fact just above that yesterday high in the afternoon at 21,687, so 21,700 on the upside, R1 today, but already kind of up at these all-time high levels again this morning. And we're going to talk about the Fed. The Fed also helping out here, because overall a bit of a dovish interpretation, and we'll have a chat about that. So just going back to last night and what we had from the Federal Reserve. Firstly, this is the headline. A very worried looking Janet Yellen. Fed ready to unwind crisis era stimulus from next meeting. Central bank lays the ground for paring back of balance sheet from September. And actually, if you were just looking at those comments alone, you would think, well, actually that's quite hawkish, isn't it? But then if you look at the charts from this morning, equities not really that telling of a reaction overall. But if you look at the fixed income market, so bottom right, the T-note, you can see moved higher last night from 7 o'clock. We moved from around 125.19 up to around a 126 handle. And then in the currency markets, you can see both Eurodollar and cable saw a pretty decent move on the upside. The move actually quite aggressive at the beginning in the euro currency, because also, for those who weren't tuned in, you had ECB's Novotny, who's the Austrian central banker, spoke about 20 minutes just before the Fed announcement, and said specifically that discussions have begun about tightening policy, did say that Eurozone real economy is improving, but balanced that by saying inflation still far from target. But it was that first comment about discussions about tightening policy, the fact that they're having more in-depth discussions, did actually see the euro appreciate just before the Fed came out. So euro dollar was already seeing a bit of upside at that time. The actual release then itself, we did see euro dollar break above then the high that was seen on the 25th, and then an extension of that in the session as it progressed in the evening yesterday. So looking at the Fed statement, really you can define it into two sections that were of key interest that moved the market. And what I've done here is I've put the text from the Fed statement onto a Word document just so I could highlight in yellow the two specific areas of very minor word changes that show how the market overall perceived this report. And as we know, inflation is probably the most important area of the economy that the Fed are monitoring, and the other big question mark here is about not interest rates. The Fed, of course, did not move interest rates last night. That was completely as expected. What we were looking out for was any commentary and further detailing towards the balance sheet tightening process. And this first section here was the first change. So on the inflation side of things, they said on a 12-month basis, overall inflation and the measure excluding food and energy prices have declined and are running below 2%. Previously, so the only word that they've changed in this one sentence was that one. They've said now running below. Last time in June they said somewhat below. So people took that as a sign of a nod towards inflation, as we know in the US, has been decreasing, falling further away from target level of 2%, the core reading also declining, and so this is the Fed sounding dovish in this sense. On the flip side though, the actual first comment, which was run by the major news wires, given the focus on the balance sheet issue, was this line, where the committee expects to begin implementing its balance sheet normalization program relatively soon. Now, the key words here was that last two words, relatively soon, because that was a change from what they said previously, was that implementing its balance sheet normalization program by the year end. They've changed year end to relatively soon. Now, the initial very quick reaction was a hawkish one on that comment, where we actually saw briefly US yields move higher, and actually we saw a momentary kind of flutter of dollar strength. However, then the market, upon digestion, took the fact that, well, this isn't a specific time frame when they say relatively soon, and then actually the dovishness came from the fact that they paid note to the fact that inflation is now falling. So they kind of downgraded their view, if you like, about the prospects for inflation. And that's why we had this relative dovish reaction. Again, equities, if it's a dovish reaction, it should be net supportive then of US equities. Maybe that's also lending its hand for the fact the Dow, the S&P and Nasdaq all sitting up around record territory still, albeit no outright big move. But the currency, that's why the dollar weakened last night and the Treasury yields fell, consequently lifting the US 10-year. So hopefully that just explains a little bit how the market digested that. Overall though, just reading through a couple of bank commentary pieces this morning, it hasn't really changed much opinion. Market pricing for a December hike is still roughly the same. It was about 45% pre the announcement. It was about 43% after the announcement in terms of probability of a 25 basis point rate increase in December. So as far as most banks are concerned, Deutsche Bank this morning just reiterating their call about more interesting discussions around its balance sheet issue in September, with the rate hike coming in December. So that was the latest state of play. Obviously this morning you got earnings to digest, and I would say trying to navigate an extremely busy day of earnings can be quite tricky, because just relying on a headline reading can be quite misleading in terms of just looking at an EPS and revenue or a net profit and revenue figure, because underlying that you might have other news flow pertinent to that specific stock, and given the fact that there's lots of companies reporting, you're going to get a pretty mixed picture. Some, as we've seen, have beat, but then some have been spectacularly bad, like AstraZeneca, who I've never seen their shares fall that much. Actually, when I got the opening call, I could hear them on the squawk saying they were called down potentially to open down 20%. My first question is, really, 20%? You know, that's a phenomenal amount for a large cap company. But in fact, they did. They opened down 15%. Again, this all means that you've definitely got to be very thorough in your preparation for these earnings releases if you're going to try and trade these indices around market open effectively. But what you're looking out for is really, to make it more simplistic from an index kind of outright point of view, if you have a series of big companies all issuing something overtly negative, like profit warnings. So for instance, Bayer this morning, which is one of the biggest German pharmaceuticals, they've dropped as much as 4% after they've cut their full year sales forecast. So in effect, that is a profit warning. The only thing is that's counter to likes of VW, who are slightly higher, and that's what makes it quite tricky to trade in the DAX. What you're looking for is a unidirectional kind of all earnings bad, all earnings good. So definitely, though, you've got to be aware of the numbers when they're coming out. European earnings, as you know, all come out predominantly pre-market open. So you should be aware of all of the results, hopefully ahead of the market open, to make a better decision then once the cash markets get underway. Okay, just taking a quick look at the charts then, because otherwise it's relatively quiet in other major news stories. Just having a quick look here at the euro currency. There's a level here we were looking at last night when we were covering the release itself, which was the high that we had back on Tuesday. You can see here in euro dollar 117.46, and we've just found a bit of a floor at that price this morning. The dollar has tried to claw back some of the losses from last night. I actually think that the market, that dollar weakness on the back of what they deemed to be dovish Fed last night, I think overall, I don't think it was hugely dovish. Maybe that move a little overdone in the dollar, so the dollar's picked up a little bit of pace. But the one thing is, Novotny on overall was fairly hawkish. Still remained pretty optimistic and bullish on economic data we've been seeing out of Europe. Overall, coupled that with the rhetoric out of the ECB, and this coming in what the market has perceived to be a dovish Fed, then from a fundamental point of view and technical, quite an interesting level here in the euro, potentially for a long at this point. It could be something to contemplate. I guess the obvious targets then would be a push back up to the intraday high, which would be the R1 on the day, up around this 118 handle, then 118.12 would be R1. Looking at sterling, we had that move actually yesterday when the dollar started weakening on the back of the Fed. Actually, there was a bit of a momentary pause around the high print from Tuesday's high, and actually that acted as a pretty good entry point. It took about an hour or so, though, to get to target at what was yesterday's R2, but did get there in the end, and was offside only for a fleeting moment, but actually managed to hold that up to R2, which actually worked out pretty well at the time, and we've added that to that gain in Asia. So looking at the levels today, I guess if we were to pull back down to pivot, could be quite interesting. I guess 131.05, the handle just below, with that high again that was seen on Tuesday, that was fairly significant as well for some of the price action to make a concerted push on the upside from yesterday. So again, playing the dynamic of this kind of more newly perceived dovishness from the Fed, and really it's more dollar-led than it is anything outright sterling that's been coming out. of recent times. Another level that's been tested this morning already is in crude. We just had a little flirt with the high that was seen amid the volatility of the Department of Energy's inventory release yesterday. And so we'll be keeping an eye on that 48.87. We had a quick run through it, but failed to sustain the break, printing at 93 at the high before pulling back. And then we're back into this kind of consolidation that we've seen since really the close of Wall Street last night and overnight in Asia. So downside there, 48.57. We'll be watching then 48.48, the pivot level. Okay, looking at the calendar for today. Not a great deal coming out from the European morning. European data you've got coming up at 9 o'clock. The M3 figures, not expecting any market move on the back of those. UK CPI distributed trades figures, exactly the same deal. I would probably classify that as really tier 3 data, so it's unlikely to really have too much impact on the sterling currency. This afternoon, a little bit more interesting. You get the June durable goods report from the US. As you can see here, we're anticipating a pretty decent reversal from the weakness that was seen in the prior month. And so looking to go from minus 0.8 up to 3% on the rebound. Ex-transportation also a touch higher. And then you've got wholesale inventories, and you've got your weekly jobs data. I would say if I was going to put this in a hierarchy of importance, then I'd be favouring the durables as probably more important than the jobless data, given jobless claims, as we know, have been tracking multi-decade lows in the US. Not so much of a concern from a Federal Reserve point of view. Other than that, though, speakers, it's pretty quiet, but you do have a series of larger cap US earnings still to come. Pre-market, Dow Chemical, MasterCard, Procter & Gamble, ConocoPhillips. Aftermarket, you'll be looking out for those tech names, like Amazon in particular. I haven't had a chance to really look too thoroughly at Facebook, but I'm pretty sure I caught a headline this morning saying how they've done a really impressive job once again. Let me see if I can quickly bring it up. You know, Facebook has been a pretty phenomenal story in I remember when they IPO'd, people were very skeptical about the ability for them to monetize their advertising, given the fact that had never really been done. They'd had a massive user base, but how do you turn that into real generation of revenue and cash? But you can see here Facebook climbed to a near $500 billion in market capitalization after better than expected Q2 earnings last night. The social network failed to dampen investors' high spirits, with a caution that growth, though, could slow in the second half. But in terms of their earnings, a 71% surge, so pretty impressive. We'll be looking out for Amazon later on this evening. But that's pretty much it. I'm not going to continue the briefing for too long. As I say, it's really been a digestion of the Fed, and then also looking through the noise of what is lots of big market cap earnings reports. Several of those I have put into the chat room if you want to read in more detail. And then that snapshot that I did share with you here, I'll pop that in the chat room as well if you want to have a look at that. Okay, guys, have a good day. Any questions, just feel free to pop them in the chat room. Happy to help. Thank you.